Mr. Radigan, how are you?
I'm feeling good. I feel like this whole, it's very, I know that the purpose of our program is not specifically, trade recommendations or trading discussion, as I know you spend the vast majority of your life doing that with other people, none other than Mr. Batista himself. But I know there was a reference on this show recently to the small caps versus the QQQ, and I just thought it was nice to see that it work. That break your balls, but that's a nice one. That's probably, helping uplift your sentiment, I would think.
I was about a week to 10 days early. I took a lot of people down with that. Call.
I went down early.
Yeah. It's actually come back to where it's extraordinarily profitable right now.
Sure.
Today alone, it's moved. I mean, this is going to sound like an insane number, but the NASDAQ is down 200 handles as we're doing this, which on this particular spread, it's because we're doing it certain ratios, and the Russell's up 30. So the Russell side of the trade is up 7,500, and the NASDAQ side of the trade is down 8,000. It's a $15,000 move today, just a one lot.
It's a beast.
It's a beast. It's
rare, and it's rare that you're going to be. I mean, that's especially for huge indexes and all.
It's incredibly rare, and we haven't seen this kind of move in that trade. But that was the most oversold. I talked about it every single day for about 10 days. That was the most oversold I've ever seen, the divergence between the Russell and the NASDAQ, and it has normalized at least to a certain extent in just 3 days. It's been 3 straight days. So that's all good.
And so, but it brings up sort of price extremity, because I was watching what happened with that, and then I'm looking. There was another indicator I was looking at this morning. What is this? Let me read this here, because the last time that market was this short, I don't remember what's the measurement here. The net short position in this S&P E-mini futures right now.
Yeah, I don't believe any of that crap.
Is the highest since 2007.
Yeah, I don't believe it. That doesn't mean anything to me.
Means nothing.
No.
So when you look at the price extreme on the spread between the small caps and tech, why is that more credible? Just out of curiosity.
Because basis is the word,
the delta you did.
No. The word spread and the word basis are interchangeable. And so when you're betting on the market, you're betting on a black or white instrument. When you're betting on this spread, this basis, you're just betting on a spread. And so spreads, by definition, like this kind of a spread, has mean reverting qualities to it. So at some point it's going to come back. When you're betting just on price, it doesn't really have much mean reversion to it. And I don't think it's, I don't think you bet on it, but more
a basis opinion as opposed to just a rational.
But more importantly, like people don't realize that a lot of the short, short interest on the future side is generated from just different kinds of, offsetting arbitrage positions. We're getting into triple witching. And so at the end of a triple witching cycle, which is this June cycle, and we roll actually in this week and next week they all expire. At the end of these cycles, all the futures positions come off. So everybody that has an index arbitrage position, it comes off. So right now, if you wanted to spend the last 2 weeks locked down in some arb position, the chances are you're going to be on the short side of the futures trade right now, and you're going to be short futures, long stock.
Mm-hmm.
So because it's easier to buy long stock, it's easier to sell futures. So I just think much of that volume, much of that short interest is all generated from arb positions, and it's not really people just taking short positions.
Right. It's not an indication of sentiment or some sort of apocalyptic point of view. It's just a hedge.
I mean, if you look at the skew index right now, which is an indicator of just downside risk, it's flashing, lots of warning signs at 150. It's right around 150. That means that there is a lot of nervousness out there about downside risk. But that's what happens when volatility gets cheap all the time. There is more downside risk. But anyway, it's true.
Anyway, I got it. The point is that the basis trade works. Mazel tov, all the
For
things.
once, yeah, I mean, it works. Yeah.
You get mazel tov out of this.
There were a couple of trades here that a couple of, like, the contrarian approach the last week or so worked really nice. The only real problem we've had in the last 2 weeks was we got caught on NVIDIA earnings, that frickin' stock, and that crazy, 30% up move in one day.
I mean, that'll get you. That'll get anybody.
It's impossible to defend. It was a 6 or 7 standard deviation move. Nothing you can do.
And you get that gap move in a company of that size is preposterous. I mean, it's never happened. I don't know if it's ever happened. I mean, but there was like
of that size, I don't think so.
At that size of like that, I mean, what are we doing here? It's nuts. Anyway, speaking of peak NASDAQ and NVIDIA, we had recently received the beautiful arrival of the Apple Vision Pro.
Yes.
Which maybe is the reason the NASDAQ is topped out, because maybe that's the shark jumping, some more shark jumping.
Well, Apple was 184 right before they showed it. It's 176 right now. So it's basically dropped 3%.
So, yeah. And Disney also was in on that deal because they're Disney's going to do content for them or whatever. And Disney had a nice run, and at least it's leveled off. I don't know if it's driving. Looked at the last.
Disney's actually rallied up a little bit. It got down to like 88. Or it's 92 right now, so it's rallied up a couple bucks, 3 or 4%. But Disney was more, Disney had crappy earnings. Disney was in this big fight with DeSantis and whatever else, and Disney just had a lot of, they had a few issues they were dealing with. I don't think the Apple news impacted Disney at all.
I am a massive skeptic of the gigantic headset for your head.
So am I.
Massive. I think it is.
Yeah, so am I.
At the same time, I don't know that I would be short Apple. Like, it's sort of like how strong is that when I test myself on my own opinion.
Yeah.
Like, I'm sure my bet is if they could get into the Apple boardroom and like take it back and be like, let's not spend $1 billion on this absurdity, I think they probably might consider it.
Well, first of all, it wasn't $1 billion. So it was probably
100 billion or whatever.
I don't know, but it was not $1 billion.
No, obviously, whatever. Google's went down this road years ago with the what is it? Where's and I actually think the majority non-tech opinion, like I was watching, so there's a bunch of people in New York and Miami, but you and I represent the public opinion. The majority opinion is like, what's with the headsets, bro? Yeah. Like, it's crazy.
Yeah.
And yet the tech companies, whether it's Meta or Google or now Apple, can't help but try to jam us all into a room alone in a corner with a headset. Why do you think, why is there such a disconnect? Especially for someone like Apple, who's so clearly tuned into consumer sentiment. It's true, the consumer electronics, I would say they're the best in the world.
Well, yeah. I mean, up until now, I think you're right. It's funny. I think they're just running out of parts. I mean, they got your ears covered. They got your wrists covered. They got your front and back pockets covered. You know what I mean? Like, they're working the body. I mean, they got the only thing left was, because
your clothes. You can do an Apple toe ring.
Yeah. I mean, when you start to think about, were you going to do like a kind of a pendant to sit in front? Were you going to do, they
belt, you could do an Apple belt.
Yeah. I mean, I think they're just running out. I think the whole eye thing, I think there's a couple of reasons. One, because they wanted to show up on Facebook because, they wanted to prove that Zuckerberg was a fool for the Oculus Rift thing, the Oculus thing. They wanted to prove that Google was incompetent because they couldn't do the Google Glass thing, years ago. And I think it was, their chance. I agree with you. I think it's, for my demographic or your demographic or most demographics, I don't think there's any market for it at all. But, other than,
video games, it's good for like the gamer, like for like the immersion video gaming.
Yeah. I mean, I don't know how many parents want their 13 and 14-year-olds to sit in the house and just stare at a pair of goggles all day. I mean, I was thinking about this the other day. I go, the first time I got goggles. I was so excited because I could add
About skiing?
ski goggles. Yeah. But even ski goggles, because I remember it like it was yesterday. They were $12.50, and I got a brand new pair.
They have like stripes on this.
Oh yeah. I forgot the brand, but they were what we call at the time fogless goggles, because all the goggles I had prior to that, they would, as soon as you put them on, they fogged up. You couldn't see a thing. So, but you couldn't ski when it was coming down sideways. Yeah.
Sure.
So I got goggles that were fogless, and I'm like, oh my God, these are $12. I guarded those goggles with my life. $12. I never thought we'd get to the point where, but that was to do an outdoor activity.
And that was and the relief that you would feel when you came off the mountain to take the goggles off was as much of a pleasure as putting them on when you got on the top. Yeah. Like it's for us, but anyway, I almost think that whether it's Tim Cook or Mark Zuckerberg or whoever, I don't know who was responsible for the Google Glass. I'll use Sergey Brin. I'm sure it probably wasn't him, but I don't know. Whoever it was. It's almost like they never wore the goggles. I feel like it's a reflect. I think the fundamental flaw in Silicon Valley is a social dysfunction that rewards people who are not social.
Yeah. Well, have you ever been around developers before?
So if you and all the other thing is all human beings think that other people are more like them than they really are. All of us have this sickness.
I mean, it wasn't until 2022 or 2021, 2022, 2023 when developers actually came out of the woodwork and just became like even halfway normal because of Zoom and other things. I mean, there were years when we would have a room full of developers back when we're building technology, and I'm not even kidding. They'd be sitting at a conference table, and everybody would text their messages. They didn't even talk.
They would still be discussing it via chat.
Everything was discussed over chat.
Even when you're sitting across the table from each other.
Yeah. I still remember years ago, The Onion did a piece where they where all these developers were going out to the Apple, the whole developers conference, and all these developers were going out there, and The Onion did a piece where like they would change one password, like one guy would change another guy's password, and they thought that was the greatest prank.
That was like wild and crazy. That was like.
Yeah, we had developers fly from St. Petersburg, Russia to Chicago just to go for 3 hours to an event in San Francisco so they could get the sweatshirt or the pullover that they gave at that WDC WWDC whatever conference, and so they go back to Russia with the t-shirt or the sweatshirt showing they were at the conference. It was status. It was like it was getting a pair of Jordan sneakers.
Yeah, that's big status. If you're at the Moscone Center or whatever, wherever the thing is, does it affect your sentiment on the stock, knowing full well that your whole thing is, you're not going to let your, but
my best trade of the week was whatever day they came out with, it must have been Monday. All Monday morning, all we were doing was we weren't selling naked. We were just getting short delta in Apple by selling. We were selling the 185, 190 call spread all morning, and the stock actually turned around and dropped about, from 180, just 184, 185 to 179 and change. So we had a nice intraday scalp in Apple, the best one we've had in a long time, and that was on Monday. So we did play it right. We sold the rumor, we sold the news, basically.
Yeah. So it's a very good week between the Apple situation and the small cap situation.
Every once in a while, Dylan, the option gods throw you a little bit of a bone, but they take it too. They took it the weekend before.
That's why you need a very short term memory.
Oh, I have a memory of my wife can remember things from 35 years ago, don't you remember that? And I can't even remember things from yesterday. I'm done. Trade wise, I would have been
remember this morning.
Yeah. Like I have the athlete mentality where you can't remember like even 2 seconds before.
Right. What they opened this morning is a black. You have no idea.
No, I remember prices, but I don't remember wins and losses trade wise. Like I don't care. It doesn't bother me. Like once I move on, I'm done.
So one of your big darlings, and not just yours, one of the, even I was a darling, I'll take one of my darlings as well. And really the darling of many and many a individual is under explicit, and I mean, now it's open war, open siege, like crypto is in the bullseye. I believe the lawsuit was basically saying that all of Coinbase's business is an illegal exchange. I mean, Coinbase is basically existential, and all domestic U.S. crypto is existential.
Yeah. I mean, that's the case. That's the
move that's been made.
Yeah, that's the move.
The degree to which there was obviously the awareness that Gensler and co. were crypto negative. They exceeded expectations, in my opinion, by going full, shut it down prosecution.
Yeah. I think they went up against the wrong opponent, because
meaning Coinbase.
Yes. Yeah. I think they have a really strong case. I'm sure they have a really strong case against Binance. And
on the mixing of funds and all that jazz, the same thing as FTX.
Well, I think FTX was more, I think FTX was just a complete fraud.
Like old school fraud, just take them.
Nothing. Like there was nothing there except fraud. I mean, FTX was legitimate. It was just an absolute fraud from start to finish. I think Binance is different. I'd like to think Binance is different. I like to think they're 100 times smarter, and they still got caught with their hands in the cookie jar, it looks like. But I don't think that they stole. At this point, I'm having a hard time seeing how they stole money. It looks more like they might have commingled funds, but I'm not sure they actually stole money.
Accounting, but not necessarily.
That's right. Well, yeah, they did something wrong, but whatever. They've already gone after Kraken for $100 million. And I think that the next, obviously, and I've talked about this before because I've liked doing business with crypto.com, and they've stayed away from crypto.com for some reason, because those are the top four players: Kraken, crypto.com, Binance, and FTX. And one of the things I told a story this week is that, in dealing recently with crypto.com, because we bought the small exchange back we sold it to them and bought it back from them. One of the things I've noticed is that their entire legal team is all SEC and CFTC attorneys. Like they hired the legal team from the CFTC. And so these firms have gotten, they did what they had to do to clean up their act and get really smart, or at least, try on every level. Maybe that's why, they've skated on this whole process. But I think Coinbase is a different animal. And I think, their CEO's a little bit of a different breed. I hope so. And I think this time the Gensler might have gone too far. And basically the stock yesterday traded, it's only down $5 from where it was the day before, which is 10%. And it was down 20%. So it's come back 10% of the move. But I really feel like Coinbase has an incredibly strong case here. And I feel like they are going to win this. And this litigation could put an end to Gensler and his little merry team of thieves, and really work in favor of the crypto.
They could expose them as incompetent and ignorant and unqualified to even be involved in the meeting.
Exactly. It is, people don't realize this, but there are different regulatory bodies that are incompetent. I mean, they're absolutely incompetent. And in this case, I think the SEC screwed up. I think they
expose themselves as unqualified.
Yeah, exactly. I think they have. And I think it's a little bit, I think maybe it's a little late, but I think they've been exposed. And I think that this is a bad move. This is actually a move, and we talked about it a little bit this morning. This is a move that hurts the entire world of finance. There's every single person, whether they offer crypto or they don't offer crypto, every single person in the world. Why do you want to go up against an entire industry? Like, you need some support somewhere. Why do you do this? Why do you go after an entire industry? Because nobody supports this. what the SEC is doing. No,
I mean, I was expecting some sort of enhanced regulation because of FTX. I was surprised that instead of going with enhanced regulation, they were like, "How about this? Your business is illegal and you are shut down."
Of course. And I understand trying to push everything, on exchanges. I get what they'd like to do, but it's not going to work that way. This is a different world. We're in a different, the concept of decentralization, it's real. The technology behind it is real. It's not going away. It's not going away. You can't.
Therefore, what? So what does that even mean, though? So therefore, so when you say decentralization is real,
well, therefore, you're never going to be able to.
That having an exchange is antithetical.
Well, you can have it both places. You can list products, but you can also have it. There can be a world. There can be kind of a peer-to-peer world. There can be a world where there can be an over-the-counter or a spot world where things trade, just like there is in currencies.
Mm-hmm.
I mean, what's the difference?
Is there a world where this super hyper dramatic maneuver is a posture to try to set up for settlement on regulation? Like, is it theoretically strategic as opposed to idiotic?
I'm not sure. If it is why do it? Why not just sit down and work it out? Like, what's the point? Like, what are you trying to prove? I think it's a money grab. I honestly do. I think it's a crazy money grab, and I don't think it's a mandate to grab money.
They want a fee of some kind from the industry.
I think it's a money grab, and I don't understand the purpose behind it because it doesn't make any sense. Like, so you're going to go after Coinbase for what? $1 billion? You're going to go after what are you going to go after these firms for? Like, I just don't. But it seems to me like a money grab. That's all it is.
Mm-hmm.
I can't figure out. Otherwise, and what would be the mandate behind that? What's the point? So you can prove, hey, we brought $1 billion into the treasury? Like, I'm not sure.
Mm-hmm. Does it affect does it affect the Tasty crypto?
No.
Business? Does it affect your opinion of crypto at the pricing, volleyball, does it matter? Or is this
it's strange for us because we're kind of stuck. So we have this situation where we'd like to expand our digital asset business, but we don't make any money on digital assets. So we're just expanding for what? For regulatory risk? Yeah, and every firm's the same way. That's why, TD or Schwab or E-Trade, or Fidelity, for the most part, Fidelity maybe offers a little crypto. I don't even know if they do or not to retail customers. But that's why the industry has put everything on hold. Because nobody knows what to do. Nobody knows what they can offer. And it's kind of ridiculous. It really is.
I mean, it's entirely ridiculous.
Yeah.
Would you short Coinbase? Would you trade around? Would you trade Coinbase in the context of this mess any which way? I
have been trading it almost nonstop since yesterday. I got long it yesterday. I'm staying long it now. I think Coinbase is one of the cheapest. I think it has, that asymmetric upside opportunity. I mean, if Coinbase settles this thing, the stock goes up $20. If Coinbase, decides to go fight it, the stock goes down 10. I mean, I love the pot odds in Coinbase. So, but again, it's going to get down to, how much, if the rest of the world is going in a certain direction and we're going in a different direction, do you really want to lose that? There's a massive amount of tax revenue. There's a massive amount of industry built around the crypto space. Why would you want to take that and drain that out of our economy and send it somewhere else? Why do you want to send it to some other place somewhere in the world? Everybody else is dealing with this and building regulatory fences around digital assets. It's not that hard. Stop thinking that it's, I think they're looking at this wrong and not looking at this as it's a technology play. Why is it any different from AI or anything else? It's not. It's just a technology play. It's a different kind of technology.
Elon Musk said something interesting the other day, which is that money is nothing more than information.
Okay. It used to be. Now it's nothing more than technology.
Right. But that's it. But it's technology. It's the same principle. I guess the reason I bring it up is because my perception is from the regulatory standpoint, they don't view money as either information or technology. They view money as power. ultimately, right? Which is I decide what happens and I decide who gets to do what, right? I decide who I tax, I decide who gets money. Whereas I think the tech world and the finance world is more, and as looking at money as either information or, to your point, technology, but it's technology that is delivering information or recording information. It just goes to the massive gap between. We need younger people that know things in our government. I mean, it's a broken record.
Yeah, it is. But, I mean, the reason that there's such a disconnect in the world of digital assets is that the financial service industry, like firms like us, fintech companies, of course, we want another asset class, another tradable asset class, and more opportunity in different products. I mean, that's the nature of our business. Spread the risk around, diversify products, create new products, more engagement, more, different demographics, everything like that. The old industry, the old legacy financial service business is like, we don't want to deal with this because our customers don't care and they're older, this doesn't fit into an annuity plan, blah, 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 all this other stuff.
And their whole business is built on de-risking and
of course, even though Tesla has higher implied volatility right now than Bitcoin, people don't realize that. So the expected move in Tesla is greater than it is in Bitcoin. But then the exchanges, they're torn because on the one hand, they would love to support product expansion because they can go after this. But on the other hand, they're kind of letting the regulators set them up with a barrier of a product and just saying, hey, you know what? If we get rid of all the OTC business, everything has to move, basically off chain onto us, onto exchanges. And so,
meaning if I'm the CME or I'm the or NASDAQ or any of these people, you're saying that they are. Well, the benefit to them of shutting down Coinbase or DeFi of all sorts.
Potentially. I don't think that's really what they want, but it doesn't hurt them. That's why you don't hear anybody say anything. That's why you hear nothing from the New York Stock Exchange or from any of these futures exchanges or from anybody else, and that's why it's a tough battle for Coinbase. I mean, that's the tough part, but I think their case is crazy strong, and I think they're going to win.
What are the three bullet points? So if you're their defense attorney in the opening arguments, what are your three?
Well, I think that Brian Armstrong put the bullets out on Twitter last night. He basically said, listen, we went public. You had no problem with that. Neither did any of these investment banking firms. And our model hasn't changed. We've disclosed all along what we're doing. Okay. Every step of the way, we've disclosed it and played by the rules. And lastly, we've come to you on numerous occasions and said, tell us what we have to do. Okay. Just simply tell us and we'll stay inside those guidelines. Just draw the lines.
Paint the roads a little bit.
Paint the lines. Paint the out of bounds line. Put up the fence. Do whatever you want to do. Just tell us where you want to be, and we're begging you to tell us what is our obligation or responsibility. And it's typical for really bad regulators. What they do is they say, and this happens to us all the time. They say, you know what? Do whatever you think is right, and then we'll tell you later on whether or not what you did was right. It's the craziest thing.
That's the worst possible.
It's why Scott has no hair anymore. Okay, because he's been dealing with this for 20 some odd years right now. When the regulatory bodies say to them, they sit down, they meet, they go, listen, we're not going to tell you can't do it, but we're not going to tell you can do it. And so what do?
But if you blow a few billion and then we decide later that we didn't like it, we might pull the rug from underneath you or try to.
Exactly. It's just a really tough situation. So I'm rooting for those guys.
Are you rooting for the Saudi PGA golf merger? Okay. So, because this to me, well, there's two different. There's the issue of the monopoly, right? Because there's this whole. It makes me laugh for a couple of reasons.
Sorry.
Bless you.
Thanks.
That's it's allergy season.
Allergies for sure.
Yeah. Everybody loves to talk about how they love free markets. They love free market competition, free markets, competition, free markets, right? Mm-hmm. But nothing is better for a business than to have no competition, right? Like if there was no place in the world that you could buy an option other than tastytrade,
sure.
you charge a higher fee. The Saudis tried to start a golf league. It becomes a whole to do. And the Saudis and then the PGA, so they go into their mess. The Saudis then file a lawsuit, or at least threaten to file a lawsuit, claiming that PGA is a monopoly, and it's basically antitrust, preventing players from playing in other leagues and all this jazz. Then they decide to merge and drop the antitrust lawsuits to make a larger golf monopoly. So I would say it brings up a couple of thoughts for me. One, the business world's claims of the desire for competition, when the best thing for any business is no competition. And the Saudi PGA merger as an example thereof. In other words, I feel like there's one part of the world that's rapaciously, like the brokerage industry is incredibly free market capitalistic, right? You can go to TD there's a bunch of people offering the thing, that B's this, blah, blah, blah. And then there are other businesses, golf being the current example, where there's no other choice, right? Even to the point where there's actually antitrust exemptions for the NFL and whatever it is. Is this just the hypocrisy of humanity? I mean, not even nothing more, nothing less?
Yeah. Business.
Standard human hypocrisy.
Yeah. Yeah.
Move along.
Yeah.
And just go with it.
I mean, listen, the crazy thing about, let's understand a little, or I think I'm right about this, but as far as I know, the PGA is a nonprofit organization. I mean, it is. I'm almost.
You mean its tax status would be a nonprofit organization?
Yeah, it's tax status. But so the PGA operates as a charitable. I think it's a charitable funnel. They don't really make any money. They just so there's
just a pass through vehicle to help the people.
Yes, in the various towns and whatever. I believe it is like I think it's a tax free. So it's a little like the church,
Yeah. Same as, remember when Dick Grasso was making $200 million a year for running that nonprofit at the New York Stock Exchange?
That kind of thing. Yeah. But then they have all these little side gigs, at the PGA, where they figure out ways that they can actually make money. So they have the PGA is nonprofit, and then they have little profit, side gigs that are profit companies that are related. I don't know how they pull off the whole thing, but they pull it off. Typical for, a sports, franchise, whatever.
A massive sports franchise with some good high-end lawyers.
Yeah, I mean, the PGA is worth, God knows how many tens of billions of dollars. And so I think the Saudis, clearly trying to, whether they were trying to, legally launder some money or whatever they were trying to do, they got big egos. Saudis have big egos. And when oil prices, they have the biggest. And when oil prices are high, they get even bigger egos. And I think, nothing says stuffy American blah 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 more than the PGA Tour. And so
old school American status.
Yeah, sure. And I think that the opportunity, also led by some superstars, which they had a pretty good idea they could, for the right price, they were going to be able to get them. They got them, and they got a few of them. But the crazy thing was, I don't think it bothered the PGA until Brooks Koepka led the Masters for 3 of the 4 rounds and came in second, and then won the PGA, basically, bell to bell. And so I think that really threw him for a loop. They're like, if we're the best in the world, how some guy that doesn't even belong to our little group, how's he winning our tournaments? Like, this doesn't look good. And I think that, there was so much hypocrisy, so much, hey, this is the don't support these guys, they're bad people, they're this and that, and then in the end, I think both sides, I think the Saudi LIV was losing probably, they were just getting obliterated. Besides the money they promised, they couldn't get a television deal, they couldn't get any fans to come out. It was a complete disaster. And so they're just bleeding money, and they're like, screw it, this isn't worth it. And the PGA is like, okay, it's worth it for us. If you pay these guys, we'll let you out. You can save face, and we'll take golf back. Done. I mean, it's just a deal. In the end, it proved like everything else. It's just business. It's no different. It's just business. It's like I talked about this morning. I said, it's like letting Tom Brady go at the end of his thing. It's just business. He won another Super Bowl after he left, but it's just business. And it's the same thing for, you're a star. You did great for us, but it's just business. We're going to move on.
Then why even bother with any of the moral posturing that people bother with, or any of the, when at the end of the day, who are we kidding?
I think what the PGA did was they did a good job of guilting, the Roy McIlroys and the Tiger Woods and a few other guys into, these guys turned down, hundreds of millions, or in Tiger's case,
$500 million probably.
Yeah. And in Tiger's case, probably close to $1 billion, and they got them to think, and which is like, for Tiger, it was like, you know what? This is good PR. It's going to make me look good. I'm a decent person. But
to borrow some moral credibility.
Right. And it did for those guys. And then in the end, the PGA basically just sold them out in 2 seconds.
That's my point.
Yeah, they were. I promise you, they were not consulted for this.
When you get in the meeting, but they read about it in the paper.
And now they have to face these guys that are going to be there. They're like, this guy, Bryson DeChambeau is going to get $100 million for just teeing off, and they're going to be like, you mother
weasel.
Yeah,
you weasel.
Yeah.
All right. Well, I mean, listen. The dollar stinks. The Fed's going to raise rates again. Nobody cares. Nobody cares. Nobody cares. Tesla, you said, has higher implied volatility than Bitcoin.
Yeah.
Which makes me think it's a nice place to pay attention. Maybe
Tesla's been
a little something. Do a little something.
Tesla's been on an incredible run.
Incredible.
Yeah, it's rallied like $100 and whatever. I mean, it's made Elon back into the richest person in the world, which shouldn't surprise anybody. It's just pretty wild to me. This market is fragmented. It's fascinating, and I don't really. I'm trying just to trade. I think there are, even the fact that with volatility collapsing, and even with lots of, kind of weird moves that we've seen both in the NASDAQ and some of these Chinese stocks and some of these other stocks, even like Tesla and these AI stocks, I think it's also so crazy cool and fascinating. But the good thing about the golf thing is it normalizes the stock market, in my mind.
How so?
Because it explains, like, you see a lot of crap go on in the world between different companies, and you're like, how do these guys get away with this? And then you look in the sports world, and you're like, oh, well, that makes sense. Then everybody gets away with this. It's all just business. Like, doesn't that normalize everything else? Like,
I mean, listen, if you give for sure, but then it makes. I just think about all the times. I just feel anytime that I have, or I've watched other people. Or, again, the Tiger Woods example, like any moral posture, whether it's in global politics, whether like it's this, or whether it's in business, I feel like moral posture has made basis in families and in social aspects, perhaps, but anywhere money is involved.
Yeah,
I mean, that's a truth or skepticism, brother, that other day, because I'm sure someone would come in the room and say, listen, like, there is some morality. Because
the numbers have gotten crazy. That's why in sports, there were these crazy rivalries, I'm sure to this day, Jordan won't speak to Isaiah Thomas, or to this day, there's so many of these athletes that just wanted to, you still see a little bit in hockey, but nowhere else. Everybody else is friends. And you just feel like, oh my God, these guys wanted to rip their heads off. I think back to the Dick Butkus days and stuff like that, the old stories those guys told, where they would rather kill the person. They wouldn't take any money. They'd rather just kill you. And I think now the money has just gotten to the point where it's insane. It's a different world.
Meaning that any personal motivations are irrelevant.
Well, it to us, I mean, there's still crazy competitors that who compete at a level that we can't even imagine. But at the same time, it's just, to me, it's kind of wild. It's just the money has gotten to numbers where, like you see it all the time in business too. You see two companies like, oh my God, like just to give you an example, I remember years ago when TD bought us, they used to have all these meetings, board meetings and stuff I would go to, and all they would ever talk about is, we got to kill Schwab. Like they hate Schwab. Okay. Everything they do is like everything they thought about. They did not a single meeting went by where they didn't discuss. And I was like, why are you guys talking about Schwab? Who cares what they do? Like, what does that have to do with us? Let's just
or Bloomberg in the early days was good to kill Reuters.
Right, exactly. And but the difference between Schwab and TD is then Schwab buys TD. You know what I'm saying? Like, they didn't have to do that deal, but they did the deal. They basically, go to their biggest competitor and go, okay, yeah, we'll do the deal. We'll sell it. Well, that's the type of thing I don't like. That's not how my mind works. It just doesn't work that way.
But are the people that hang on to any moral fiber of their being doing themselves a disservice? To the point of Tiger giving up the $1 billion while Party Boy's over there with $100 million and now they're playing in the same league.
Well, because Tiger doesn't have shareholders, I don't think he's under any obligation. Like he can do whatever Tiger wants to do. If Tiger had sold, Tiger Enterprise to a million different people, Tiger would have had an obligation to at least show that offer, to his shareholders. Sure. But it's his, he's Tiger Woods. He doesn't care. He can do whatever he wants. Like Dylan Ratigan can do whatever the hell Dylan Ratigan wants. Sure. But if there was a million Dylan Ratigan shareholders, which by the way, the next generation, like a generation or two from now.
Yeah, with crypto, you could do it for sure.
Well, and also you're seeing it like with, you obviously see it with certain, like with horses now and with paintings. Mm-hmm. You're going to see it with individuals. Warren Buffett used to say something to that effect. I'd like to buy 10% of every person in this room for a certain amount of money. I can see that happening.
I'm sure it already exists.
Yeah, at some level it may. So, all right.
Well, listen, it's a plan. I'm happy for the good news of the good things. I'm going to focus on those. I ignore the NVIDIA crisis of last week.
I'm Tom Sosnoff. He is Dylan Ratigan. This is Truth or Skepticism. We do this every Wednesday at 1 p.m. Central Time. And if you are in Europe, anywhere in Europe, in 2 weeks, just a little over 2 weeks, on June 24th, Dylan and I will be together in London at Shoreditch Town Hall. You can sign up to see the event we're doing at tastylive.com/events. tastylive.com/events. We would love to see you in London. It's the first time we've done something together in the UK ever. And we haven't done any live shows together in I don't know, it's been at least 5 or 6 years. So we're excited about this. It's going to be a lot of fun. It's from 10 to 12 in the morning in London. So if you get a chance to come out there, if you're anywhere close, we'd love to see you. Have a great week, Dylan. See you next week.
See you next week.